Hello everyone, I'm Shannon Morales with Tax Analysts. Thank you for joining us today on Facebook Live for the latest installment in our weekly discussions on tax reform. Now today we are live from Capitol Hill to talk about tax reform from the place where it is all happening. About a month and a half ago, about a little over a month ago, Trump released his Trump's administration, his one-page outline on tax reform. So from that, there's been a lot of discussion. The plan showed that they will try to reduce the corporate income tax rate from 35 to 15%. It shows they want to double the standard deduction and a lot of other cuts and eliminations. Now, from that, we've been talking a lot of questions on how will that plan be paid for, when is an actual draft bill going to be happening, and whether elements of the GOP's House blueprint will be involved. So today, to help us with all those questions and to go through all the confusion, I am joined by Stephen Cooper and Dylan Moroses, tax analyst, Capitol Hill staff. So thank you both for joining us.
Good morning.
We always enjoy talking to you.
Good morning.
So to start off, let's talk about what Gary Cohn, National Economic Council, recently said. He recently announced that lawmakers should have a draft tax reform bill to work with by the time they return from summer recess. How likely is that to happen? And does it look like Congress will be able to pass tax reform before the end of the year?
That's a very optimistic deadline he set. But as you know, the president often sets deadlines that come and go. So I think
It's been a couple.
I think what's really important is what the lawmakers up here are looking at. And at this point, they have their hands tied with the health care bill. They have the tax reforms going on. There's a debt limit going on.
Sure.
There's a reauthorization of the FAA, I believe. There's children's health program has to be reauthorized. There's a lot of stuff coming all together by the end of the summer and early fall. So I'm not optimistic that date for tax reform is going to actually happen.
So yeah, I think another thing to add is the Director of Legislative Affairs for the White House, Mark Short, on Monday this week sort of gave an updated timeline and said that most of the activity on this health care bill, the American Health Care Act, that's in the Senate right now, will probably occur between June and July. So they're looking to probably have a vote on that piece of legislation by the time they leave for that August recess. In addition to that, they're also talking about working on the fiscal 2018 budget resolution and the reconciliation instructions that go along with that would sort of set the stage for the tax reform debate. Again, that's a lot of work in addition to some of the reauthorization they have to do on the FAA, on the CHIP program. So it doesn't seem likely that they would even sort of switch gears to that fiscal 18 and the tax reform discussion until that September, that fall time frame. And at that point, they have a lot of things that are must-do pieces of legislation, like the debt ceiling and the reauthorization. So it seems like they have a lot on their plate, and it seems as though having a piece of legislation on tax reform passed by the end of the year seems more increasingly unlikely at this point.
Okay.
Right.
All right.
It does.
All right, so the White House has indicated that the border adjustment from the House blueprint is really unacceptable in its current form. But what about the other provisions from the blueprint, such as the one for immediate expensing as an alternative to depreciation, or the one for the treatment of net interest expense? So how likely is that those will feature in the draft that Congress comes up with?
So the full immediate expensing, I think, House Republicans have really been promoting this as one of the most pro-growth provisions in their tax reform plan. However, some businesses, so there's this trade-off between the full business expensing and the elimination of the deduction for net interest expenses.
Okay.
So that's really crucial and beneficial for small businesses that rely on debt financing to purchase things ahead of time that they might not have the capital for.
Sure.
It's also prevalent in financial services industries, amongst other things. So there's a huge trade-off at play, and I don't think it's getting as much publicity as the border adjustment debate.
Yeah.
But there's a lot of stakeholders that stand to lose a lot. So and in addition to that, the administration has also come out somewhat with mixed reviews about the eliminating the deduction for net interest expenses. It's really crucial. It's beneficial for the mortgage, the real estate industry.
Right.
And
Exactly.
being that President Trump sort of made his fortune in
Yeah.
real estate, It's something that he holds sort of close to him.
Sure.
So it's something that's still up in the air, but again, it's one of those things that there's a lot of questions that surround it.
And then if you remember the actual blueprint that the Republicans put together during the campaign season that was released back, I think, the summer, it did include a line that said they would make some changes to the mortgage interest reduction. They would work on this, but they didn't say they were going to eliminate it. So I don't think that is really on the table at this point. And they said they were going to look at share reduction, but they didn't say they were going to eliminate them. So I think there's been a lot of talk about what could happen.
Yeah.
But if you think back to the last time they did tax reform in 1986, there were a lot of different meetings going on between the Hill and the White House. Treasury had several white papers that came out talking about what their proposals were. Look at this year. We have a Treasury Secretary. He's nominated a Treasury Assistant Secretary for Tax Policy, but there are a lot of open positions. So the pieces that need to be in place for them to actually come up with a piece of legislation and push it they're not there yet.
Yeah.
And among our own thing, there really hasn't been a whole bunch of tax reform hearings going on right now.
True.
There's been two in Ways and Means. The Senate Finance Committee, yesterday, I think, we have a story from Mark Prater in today's Tax Analyst that talks about some of the bipartisan meetings that have been going on behind the scenes in the Senate Finance Committee between the members of the Democrat and Republican Party, between just Republicans only, between staff to staff. Those things have not spilled out into a public hearing where they could say, we like this proposal, we don't like this proposal. So until you see some hearings scheduled, I'm not of any real hope that they're going to do anything.
I think another thing to point out is that sort of equated to like a merge at the Lincoln Tunnel, right? We have three sort of big trucks or big cars.
Sure.
Right? We have the House, we have the Senate, and the administration. And the administration is sort of trying to influence it, but not really. Sort of taking a hands-off approach. The House is the only one right now that has sort of a fleshed-out proposal, a blueprint with a lot of bold ideas. So there's something to be said for that. And the Senate has sort of taken, a wait-and-see approach at this point. So everyone's sort of waiting to sort of play their hand. But I think we'll see sort of that activity start to increase in the next few months. Hopefully, we'll see some sort of, some proposals start to solidify.
Hopefully, it'll be interesting.
Yep.
So an unresolved issue is to the extent which the discounted corporate rate, say the 15% if we were able to do that, would be extended to non-corporate business entities. Now, President Trump has indicated that that's something he wants to do. Based on what you're hearing around the Hill, how receptive would Congress be to that idea?
So I think there's broad agreement amongst both Republicans and Democrats that there needs to be something done for both corporate tax reform and sort of the small businesses pass-throughs, the non-corporate business entities. How you sort of get there is a huge question. I mean, if you're going to have disparity between a corporate income tax rate and a pass-through business income tax rate, it lends itself to sort of gaming. It lends itself to tax avoidance schemes, things like that. So there needs to be some sort of safeguards in place, some sort of guidance or regulation that comes in addition to those drastic changes in the tax code. Those discussions I don't think are ongoing at this point. At least from indications we've gotten, they're only in the real sort of early stages of trying to figure these things out.
Right, and also those lower rates, while they may boost economic growth according to Republicans, a part of the Republican Party does believe that deficits matter, and they may ask that some of that be offset. And then when that discussion begins, then you have to talk about, well, what are the things that could raise revenue in the blueprint? Then it leads back to a discussion about the border adjustable tax.
Is it in, is it out?
Is it in, is it out? And so getting to the lower rate has all these other decisions attached to it.
Absolutely.
And sort of that 15% rate, another thing to note is in speaking with lawmakers and speaking with staff, lobbyists, think tanks, all the stakeholders involved, getting to that 15% rate is extremely difficult, if not impossible, to do in a deficit neutral, in a budget, sort of in a budget reconciliation framework.
Sure.
Right.
So that's another thing to sort of keep in mind when talking about such a drastic rate reduction.
Okay. All right. Well, several months ago, Senate Majority Leader Mitch McConnell announced that any tax reform bill would need to be revenue neutral to pass through the Senate. So do we think that's still the case? Because obviously the outline we received from President Trump's administration was far from revenue neutral.
See, I don't know if that's still the case or not. It's hard to tell up here when a political statement becomes reality and when it's just a reaction to what another party has said. Some of McConnell's statements about what happens with extenders, what happens with tax rates, have been in response to some Trump's tweet or some statement he's come out with.
Yeah.
He's sort of been the person to say, well, we'd like to have more revenue neutral stuff. Well, we don't think we can rush this bill through the floor. I don't know. I don't know how to judge that revenue neutral statement in light of what's happening recently.
Yeah.
I think another thing to note is that I think everyone in Congress has sort of been promoting this idea of revenue neutrality and revenue neutral tax reform, especially in the House. I mean, the House has been sort of taking the lead on promoting revenue neutrality because they sort of see it as the key to producing permanent tax reform, especially through the reconciliation process, which has its own constraints. So it's sort of that ambitious goal that I think everyone's promoting at this point, but ultimately it remains to be seen what they end up with, what their end product is, and sort of this idea that a drastic temporary tax cut is already out there. Everyone's starting to beginning to talk about it.
Yeah.
It's only a matter of time before that proposal gains a little bit more steam.
Okay.
Yeah. And Les, there's always a possibility that inertia will take over, and then in December we'll have a tax cut bill, which may be totally divorced from all the talking that we are seeing now about tax reform and board adjustable tax. All that stuff could just fade away to we need to have this one cut to stimulate the economy.
Yeah.
And we have to use reconciliation to do it, and so therefore we'll just take the lumps and just pass a tax cut bill that lasts for 10 years and.
That pressure sort of goes hand in hand with this idea that we've heard from several people that at the beginning of any new administration, within their first year as president, they have some sort of tax focused bill. Either it's considered a jobs bill or a tax bill. But that pressure could amount to them just sort of reconciling or coming to just a tax cut.
That makes sense. All right, so going back to the idea that it would be revenue neutral, you'd obviously have to pay for it. So we talked a little bit about some revenue raisers. So let's go a little bit deeper into that. Because obviously they would go a long way in terms of paying for this big corporate tax cut. But some of them are very controversial. So things like the home mortgage interest deduction, which we touched on, the income exclusion for employer-provided health care, and the deduction for state and local taxes. What's the chance that any of these big ticket items might be seriously considered?
I'm laughing because about a couple of months back, the Republicans were thinking about doing health care reform, and they floated the idea out that they wanted to cap the exclusion for employer-provided health care. It was part of legislation that one of the reporters got their hands on. It floated around the Hill by Friday. Probably about Monday or Tuesday, it was pretty much well understood that was not going to happen. They were not going to be capping the employer exclusion.
Didn't take long.
Didn't take long at all. And then when the actual American Health Care Bill came out, I guess maybe it was 3 weeks later, it was nowhere to be found.
Okay.
So that's a very popular break, and I think that they would alienate a lot of Trump voters and just average Americans by getting rid of something that's been in the code for years.
Right. I mean, we've started to hear sort of rumblings that it's coming back up in the Senate that they're sort of considering putting a cap on the exclusion. It's sort of to replace the Cadillac tax, which is a 40% excise tax on high-cost health insurance plans. Then speaking to some lobbyists, some stakeholders, it seems to have the same effect on employer-based coverage. But I guess the brunt of the issue is these stakeholders. The business owners, the union members, those types of people, they won't want any sort of burden, tax burden on their employer-sponsored coverage. So, I mean, that's how it's been traditionally in the past, and that's what they would want to see it remain as.
Yeah, and Democrats will easily make their case. So why do you have a tax cut for wealthier Americans in exchange for you losing your health care benefits that you get through your job?
Yeah.
That's easy. That's an easy way to bring a Democratic viewpoint to bear on this. And up here, whoever has the easiest, most coolest way of saying something generally wins out most of the arguments. Because if you have to take 15 minutes to explain why the exclusion is no good and what it does, compared to
people stop listening.
Why are you taking my health care away? Mm-hmm. That wins every time.
Politics. All right, so what about the possibility of doing business-only tax reform? So if Congress were to develop legislation that was limited to cutting the corporate tax rate and lowering taxes in general on businesses, but left rules for individual income taxes unchanged from current law, is something like that possible?
Well, I think if you look at the last few years, that's been kind of the premise of any sort of tax reform talks. Over the last couple of sessions, we saw Senator Portman and Senator Schumer and Senate Finance sort of work on this international tax reform issue. Senator Michael Enzi, who's also on finance, but he's the Senate Budget Committee chairman. He has his own international tax reform plan. So that's been sort of their focal point for a long time. I think that the challenge that they face is politically, it's very difficult to address corporate tax reform and tie it to sort of individual benefits if you're not also addressing the individual part of the tax code.
That makes sense, yeah.
Right. Although, I think that is probably where they're going to end up.
Okay.
I think they're going to end up with the corporate-only tax bill.
All right.
I think that's what's going to be the thing they can all agree on. They won't be able to agree on how to deal with pass-through businesses. They won't be able to agree on how to stop inversions. But a good old-fashioned corporate tax rate cut,
they can get on board with that.
They can get on board with that, yep.
All right. Well, I appreciate the update from both of you. I think we learned a lot. We know where we're at for now. But I think things are going to start to change pretty rapidly before August recess. So We'll hope to catch up with you again before then. Thank you all for joining us. Have a happy Wednesday.